you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions. Hello and welcome to Morningstar. I'm Emma Wall and here with me today is Alan Dobbie, manager of the Rathbones Blue Chip Income and Growth Fund. Hello Alan.
Hi Emma.
So you're here today to give 3 stock picks. What is your first stock?
My first stock is the Swiss pharmaceutical company Novartis. I would say just on the sector, first of all, very positive on the outlook for the healthcare sector. We think it's going to be one of the few beneficiaries of some of the big global demographic trends that we've got going on in the world, both in terms of aging populations in the West and also the very rapid population growth in many emerging markets, increasingly affluent population growth in populations in many emerging markets. On Novartis in particular, we think it's a company that has really transformed itself over the last 12 months. They've done deals with Glaxo and Eli Lilly. So they're now centered around 3 business units. They've got innovative pharmaceuticals, eye care, they own Alcon, and quite unusually for a pharmaceutical company, they own a generic drug business, Sandoz. But on innovative pharmaceuticals, I think this is a real differentiator for Novartis. There's been quite a change, I would say, over the last couple of years in terms of the balance of power between the big pharma companies on one hand and the drug buyers on the other hand, whether that's national health services or some private health insurers in the US. And essentially these drug buyers are now saying, we're not willing to pay ever increasing prices for drugs that are only showing very incremental improvements on the current standard of care. I think Novartis maybe spotted that a bit sooner than some of their competitors. So they're really focused on searching in areas, drug discovery in areas where they think they can actually add great value and deliver value for money for their clients.
I mean, the one big concern with all pharmaceutical companies is you're only as good as the last blockbuster drug. You can talk about pipelines, but pipeline is just a pipeline, really. It's not revenue producing at that juncture. Is that something we should be concerned about with this company?
You always have to look at the pipeline. I think, Novartis do have a strong pipeline. One drug that I would mention maybe is they've recently, or hopefully just later this year, they should get a drug for heart failure approved in the US, a drug called LCZ696. Catchy. Hopefully they'll change the name if they get it approved. Heart failure is an extremely serious condition. It affects more than 30 million people throughout the world. And this drug, the clinical data was actually so strong that they had to stop the trial 6 months early because effectively they had already proven their case. So we expect that to get approved later on this year, and that should be a multi-billion-dollar blockbuster drug.
And what's the second stock today then?
The second stock is Bunzl. Boring Bunzl, as many of the analysts like to call it. And it is quite boring, to be fair, but it's been a fantastic performer over the last few years, and we think it can continue to be so going forward. It's a distribution and outsourcing business. So in kind of more plain language, they are a key supplier to many of the world's supermarkets, restaurant chains, coffee shops. Basically everything that you see in a supermarket that's not for sale is probably a Bunzl product. They supply about 2,000 products, till roll, cleaning products, the butcher's hat, all these kind of things. So it's a low margin, high volume business, generates good returns, very good cash conversion, good management team. But the real excitement with Bunzl though is in the acquisition strategy. They have bought around about 100 businesses over the last decade. And unlike most acquisitions, these are value-creating acquisitions. They've got a great track record of doing this. That generally adds about 2/3 or accounts for about 2/3 of the company's growth. At the recent results, the company said that they have identified around 500 potential acquisition opportunities. I'm not suggesting that they're going to do all of these, but it gives you some idea of the potential growth trajectory that company could have.
So you mentioned supermarkets there. Obviously, UK supermarkets are in a bit of flux at the moment. The previous reliable dividend players of old, can no longer be relied on. How much does that threaten Bunzl's business?
It is a risk. I mean, Bunzl are a global business, so we have to put this into scale. I mean, 50% of their earnings are earned in the US. They also have a big business in South America. But, they are working with the UK supermarkets. They supply companies like Sainsbury's, Sainsbury's, Waitrose, Asda. They do offer cost savings. They are an outsourcing company. They manage these companies' working capital. So, they're working closely, but ultimately lower food volumes, lower sales in these companies will affect them.
And what's the third stock today?
The third stock is another company which is grown by acquisition, Anheuser-Busch InBev, maybe a different scale, transformational acquisition. They're the world's biggest brewer. They own brands like Budweiser, Stella Artois, Corona, about 200 others. It's a fantastic example, probably one of the best corporate success stories of the last few decades. It's a great management team, great corporate culture. Why do we like it at the moment? We think it's a good play on the US consumer recovery, low fuel prices, recovering economy. That feeds right into the Anheuser-Busch, the Budweiser demographic, really. It's also becoming more of an income stock. The company recently increased the dividend by 46%. So it's now yielding a similar kind of level to the Nestle's and Unilevers of the world. And finally, there's a big kind of opportunity in China. At the moment, China is a huge volume market, but it's very low margin. But we expect that to develop along the same lines as many other developed beer markets in the world.
To increase your dividend by nearly 50% is a pretty punchy move. Is that sustainable, that kind of growth, or even that kind of level?
We think it is sustainable. It's a pretty punchy company. They're quite happy to increase their dividend, and then if they see a big acquisition opportunity, companies like SAB, Pepsi, even Coca-Cola have been mentioned as potential acquisition opportunities, then they would cut the dividend and use that cash to buy a company. But at the moment, I think the signal that you get from a 46% increase in the dividend, they also did $1 billion buyback, that suggests that they're not seeing attractive opportunities at the moment.
Alan, thank you very much.
Thank you, Emma.
This is Emma Wall for Morningstar. Thank you for watching.